Hello ladies and gentlemen, in this video we are going to see about a public revenue. Revenue is nothing but a receipts. Public revenue is nothing but a receipts that was received by the government. So what are all the receipts that was received by the government is divided into two major types. One is a revenue receipts, another one is a capital receipts. Revenue receipts are non-redeemable one. Non-redeemable means that the government has no liability to pay the money back. Government has no liability to pay the money back if it in case it was a revenue receipts. Take for example, revenue receipts was divided into two types. One is a tax receipts and a non-tax receipts. Tax was collected by the government, but it does not create any responsibility to give the money back like that of a capital receipts. So we can see the capital receipts create a liability or reduces the financial assets. So capital receipts is nothing but it either creates a liability or it reduces the financial assets of a government. Take for example, loans raised by the government. Government is raising the loans from various sources, and it creates a liability for a government because government need to give back the loan amount that it gets from various sources. So it creates a liability. Then small saving funds like a post office savings, some other small saving funds which was given by the people to the government as a saving for them. So government need to pay back such amount to the people with interest. So it creates a liability for a government. Then provident fund, PF fund, employees paying a PF to the government. So PF was deducted from my employee's salary, but the government need to pay it back later. Then receipts from a selling of a share. Governments invested its money in various shares, various share markets, various bonds. So whenever government sells such a such a bonds, what happens is that shares and bonds, shares are considered as a financial asset for a government. When the government sells shares to anyone, what happens is that it has no more rights for that shares. So, because the share was sold, so government's asset was reduced, its financial asset was reduced. So these four are the capital receipts for the government. It must either create a liability or reduce the financial assets. Now come to the revenue receipts. So revenue receipts, as I already said, consist of two types. One is a tax receipt and another one is a non-tax receipt. So tax receipt is nothing but a receipt that was received by means of imposing a tax. Non-tax receipt is nothing but a tax from various sources such as interest receipts. Governments giving a loan to various peoples, various organs, various governments, state governments. So for that loans that governments given to them, receipts for that money government gives to the people, government gives to the organization as a loan, it receives the interest. It receives the interest for that money. So such interest does not create any liability. Such interest does not reduces any financial assets of a government. So it considered as a revenue receipts, which parts of a non-tax receipt because it was not a tax, it was an interest. Then fees on a government services. We are going to government offices to receive any services and we are paying a fees for that, right? So it is also a part of a revenue for that, which is a non-tax revenue because it was not a tax. Then profit and dividend. So government running various factories, various companies, various businesses, various public sector industries were there. So government is earning a profit from that and also earning a dividend on such companies. So it was a non-tax one. It was a revenue receipts because there is no liability for a government to give it back because it was a profit. No need to give it back to anyone. Then grant-in-aids is nothing but if a government receives any amount, any money from any organization or any country during a very extreme situation such as a flood or some other pandemic situation, if it receives any grant in aid, the government may not give it back because it was provided as a help for a government. It was provided as a grant in aid. So government does not directly need to pay it back. So such amount was known as a grant in aid. So these are all non-tax receipts for a government. So what is the tax receipts? We are going to see it detail. We are going to see detail about the tax receipts in the upcoming videos. Now I am saying it generally. So tax receipts are of two types. One is a direct tax and another one is a indirect tax. Direct tax are directly imposed on an income of a person. It may be a salary, it may be a profit, but it was directly imposed on an income of a person. Such a tax is known as a direct tax. Take for say for example, income tax. Income tax is a direct tax. Then corporate tax is a direct tax. Next is the indirect tax. Indirect tax is nothing but which was imposed on products and services. It was not imposed on a income of a person, but it was imposed on a products and services. Take for example GST. GST was imposed on a goods and services. So it was a indirect tax. So this is what is known as a public revenue receipts, and we are in the upcoming videos we are going to see about what are all the taxes are there. Okay, thank you.